Hello, hi, good morning to all. Welcome to the class. Previous class, we were discussing accounting concepts. Today, we will be discussing the accounting conventions. So, we are discussing the 4 accounting conventions. Number 1, conventions of materiality, conventions of full disclosure, conventions of convertism, conventions of consistency. Conventions of materiality, conventions of full disclosure, conventions of conservatism, conventions of consistency. So, accounting concepts we were discussing or adapting based on the some financial rules and regulations. Likewise, here also conventions of accounting based on the customs, traditionals or common practice which are universally followed in recording and presenting accounting informations of business. We may be making or follow the conventions of accounting. Some of the common practice rules based on that in accounting profession they were introducing conventions of accounting. So now let us discuss the number 1, conventions of materiality. Conventions of materiality is nothing but which are the information required in organization to anybody. For example, investors or shareholders or governments or dividends holders or organization peoples, whichever the information required. So, those information considered under the conventions of materiality. We are not focused immaterial or insignificant information under the conventions of materiality, which are the information required in an organization to any stakeholders, that only we may be focused. So this is the conventions of materiality. We are ignore the immaterial or insignificant information in a business activities. So this is the conventions of materiality. And next one, conventions of full disclosure. It is against that conventions of materiality. Here, disclosure all the informations relating to the accounting in a business. For example, we may be maintain the transparency in our business activities, indicating the full disclosure, conventions of full disclosure. The full disclosure is a concept that require business to report all necessary information about their financial statements, which are the information arising in a business activities. We may be taking their financial statements. So this is the full disclosure, conventions of full disclosure. And next one, conventions of conservatism. Conventions of conservatism. This is full game. Take all the possibilities of the transactions in a business activities. For instance, outstanding expenses in a current year we may be taking, or in a current year receivable incomes we will taking in preparing a financial statement. So this is the conventions of conservatism. And finally, conventions of consistency. Conventions of consistency is nothing but when we are using any principles in accounting practice, we may be using that practice only. We can't change simply that principles in accounting practice. For example, we may be know the different methods of depreciation. For example, straight line method, diminishing balance method, annuity method. We may be using any one method when we are calculating the depreciation. So this is the conventions of consistency. We may be show the consistency in any principles for using a accounting practice in an organization relating to the any business activities. So this is the conventions of consistency. These four conventions of the accounting. So previous class we were discussing the concepts, and this class we are discussing conventions. So concept and conventions very essential to accounting profession or accounting practice in any organization. So then only we are able to showing the transparency or authentically we are follow the any practice, accounting practice in a organization. We may be preparing a trading account or P&L account or balance sheet or any accounting practices we are using. These are the concept and conventions.